Hello, Chart This viewers, and welcome to Chart This After the Show, our final recording for 2013. This is part 2 of Outlook 2014. As you know, over the last couple of inserts, what we really have been looking at is two distinctly different models. And those models are really part and parcel of the same thing. The key in terms of a differentiation is where we're looking for a potential bottom or termination of our current fifth wave, because once that fifth wave is terminated, we will go into a ABC correction in a bear market count, and in a bear market count, that of course would be an upside rally. What we've really talked about when we really take a look at this is wave 1, 2, long wave 3, 4, and the question is, where will we see this market terminate? Now, I am recording this Sunday, the 23rd of December, a couple of days just before Christmas, and my sense is that we have a little ways to go still. The low that we reached on this last move down was, I believe, 1198. We have this 1181 low, so we've come close, but we really haven't come to the lows or had equal matching lows. And the two distinct models that are presented is one which bottoms or terminates, of course, at roughly 1181. And in that case, we're fairly close, 98.81. We're about $20 away. The other model takes our fifth wave to a new low. And as I present both models to you, there's one other way we can look at it, because we've been looking at really our intermediate count. And our intermediate count, of course, is 1, 2, 3, 4, 5. Our ABC, and then into our bear count. There's another way that we can look at this market also and move a little bit above, and to do that, we really want to look at our major count. And on our major count, I have put us in a major third here. This is the termination of our major first, second, third. And with this in mind, we would be looking at the potential of simply seeing this particular sell-off a little bit different. This is another way or another model that we can use, but wave major 1, major 2, major 3, major 4, and then we would go into a fifth wave back into a bull market count. Now, the reason that this actually holds some weight is when we look at the 61% retracement of this move here, and the 61% retracement is a move of $700 up to 1920. You have 1161. Just below that, we have these lows that came in February of 2010, I believe, and they were around, call it 1045 to 1050. And so my sense is that we're probably going to have one more washout. And the way that I would look at the market is this. 1, 2, of course this is made up of 1, 2, 3, 4, and 5. Then we go into a B, our terminating C. And I would look for our C really to terminate below the last low that we've hit, which is this 81, and I think that we could see the market wash out. It would be above 1045, but my personal sentiment is somewhere around 1100, just below this 1161, and from there we're going to go into some sort of A, B, and C. So to really clarify what we're looking at, my sense is that we're probably going to see the market head lower before it heads higher. And one of my primary rationalizations for that is looking at the equities markets. The equities markets are in an absolute tear. We talked about the divergence that we have found between the equities markets and the stock market right here and here. And my sense is if that continues through the first part of the year, we will probably see continued downside pressure, at least for the first couple of months, maybe January and February, where it washes out, hits these lows, and then moves into our bullish rally, that ABC bullish rally within this bear market count. This has been Gary Wagner. I want to thank you for your loyalty and wish you a most happy and prosperous new year. And if you celebrate Christmas, wish you a very Merry Christmas, and to all, very, very good wishes towards a great holiday season. Bye-bye.